India's export-oriented sectors are poised for a broad-based upside after New Delhi and Washington clinched this long-awaited trade agreement late on the evening of the 2nd of February. Under this agreement, the US reduced reciprocal tariffs on Indian goods to 18% from 25%. I don't welcome you're watching Deep Dive. I'm Uday Pratap Singh. Announcing the deal, US President Donald Trump has said it would be effective immediately, signaling swift tariff relief for Indian exporters. Trump, in a post on Truth Social, announced, out of friendship and respect for PM Modi and as per his request, effective immediately, we agreed to a trade deal between the US and India, whereby the US will charge a reduced reciprocal tariff, lowering it from 25% to 18%. He added that India would likewise move to cut its own tariffs and non-tariff barriers on US goods to zero, likely a part of the much-anticipated trade deal between the global powers. PM Modi welcomed the tariff cut as a boost for Indian industry and exporters. Notably, the rollback comes after months of stress following steep tariff hikes, in some cases up to 50%. That had kicked in from the 27th of August 2025, sharply raising landed costs, hurting competitiveness and weighing on demand for Indian goods in the US, India's largest export market. Now, with the tariff burden easing, companies with significant exposure to the US are expected to see relief in margins, improved competitiveness and better order visibility. The tariff cut is a meaningful positive for several export-heavy sectors, including textiles and apparel, seafood, auto, ancillaries, engineering goods, chemicals, gems and jewelry, as well as select consumer exporters. Textiles and apparel are widely seen as the biggest beneficiaries of the pact. The US accounts for nearly 28% of India's total textile imports, making it the single largest destination for Indian manufacturers. More than half of India's textile and apparel imports are also linked to US cotton, underscoring deep trade integration. The segment is amongst the most price-sensitive within India's export basket. Products such as cotton, garments, home textiles and made-ups compete directly with suppliers from Bangladesh, Vietnam and other low-cost hubs. A reduction in tariff narrows the pricing gap and supports large exporters supplying US retailers in mid-value categories. Companies with higher US exposure are likely to see faster volume recovery and improved pricing power. Stocks with significant US revenue exposure include Indo-Count Industries 70%, Kitex 70%, Gokaldas Exports 67%, Pearl Global 64%, Welspun India 61%, Himmat Singh Ka Sedi 60%, Trident 28%, Vardhaman Textiles 25%, SP Apparels 22%, Arvind 14% and KPR Mills 9%. In chemicals, particularly specialty chemicals and intermediate exports are governed by long-term contracts and stringent compliance norms, while demand is less sensitive to short-term price swings. Tariffs directly impact net realizations. The tariff cut strengthens India's position in US supply chains looking to diversify under China Plus One strategies. Key beneficiaries include UPL, 20 to 25% US exposure, SRF 20% and Jubilant Ingrevia 9%. Other potential gainers include Aarti Industries, PI Industries, Atul, Naveen, Fluorine International, Deepak Nitrite, Vinity Organics, Alkyl Almines Chemicals, as well as Gujarat Fluorochemicals. Engineering exporters are also expected to benefit. Engineering goods form the largest share of India's merchandise exports to the US, spanning industrial machinery, electrical equipment and capital goods. These businesses typically operate on thin single-digit margins, making tariff relief immediately earnings accretive. Lower tariffs improve India's competitiveness versus East Asian suppliers, especially in contract renewals and incremental orders. While volumes may not spike immediately, exporters gain pricing flexibility and stronger negotiating leverage in long-term supply agreements. Stocks with notable US exposure include Sona BLW 40%, Ramakrishna Forging 27%, Bharat Forge 25%, Samvardhan A Motherson 18%, Balkrishna Tyres 18%, Sansera Engineering 9% and Apollo Tyres 3%. Well, gems and jewelry exports, including cut and polished diamonds and gold jewelry, are high value but fiercely competitive. Tariffs directly impact retail pricing and inventory costs for US wholesalers and retailers. The reduction from 25% to 18% lowers landed costs, easing margin pressure for Indian exporters. The seafood sector is another key beneficiary, with the US remaining a critical market for Indian exporters, particularly shrimp and frozen foods. Lower tariffs are expected to reduce landed costs, aiding demand recovery and improving earning visibility. India's seafood exports to the US are expected to recover after months of decline, following Washington's decision to lower tariffs to 18% from 25%. The Seafood Exporters Association of India said on Tuesday. While exports to the US fell 15% by volume to 101,501 tons during April-November of the current fiscal, while value has declined 6.3% to $1.72 billion from $1.84 billion a year ago. Amongst listed players, Apex Frozen Foods derives 63% of its revenue from the US, followed by Waterbase at 40% and Avanti Feeds at 14%. Companies with higher dependence in the US market, meanwhile, could also see sharper profitability improvement as volumes stabilize. If carried out, the move would mark a significant shift in India's long-standing trade approach, which has traditionally deepened on protective measures to support domestic industries. It could also open the door wider to US agricultural goods, energy supplies and manufactured products. However, in trade terms, this language typically signifies an in-principle commitment to lower or phase out duties on selected US products rather than immediate elimination of all import duties. Well, non-tariff barriers encompass various restrictions such as licensing rules, quotas, certification requirements, local sourcing norms and regulatory approvals that can limit market access. Notably, the agreement also comes days after India signed a major trade deal with the European Union.